accounts receivable and cash, aren't we? Okay? So I want you to know about the allowance method for doubtful accounts. We're doing a quiz on this stuff. Right, that's totally unfair, right? Yeah, work your homework, guys. Keep going. I think it's going to work out pretty good, actually. I like it. Right? Keeping the quizzes relatively short, believe it or not. You know, if I had a couple more days per chapter, I could make them, you know, much longer, you know, not much better. But by the time you take the test, you're going to know how to do this stuff. That's what we want. Certainly by the time of the final. Okay? So, a lot of stuff to crank through. It's a marathon, not a sprint. It just feels like a sprint. Right? Keep on sprint. Keep on going. Okay? So, has everybody read the chapter? That's unanimous. Okay? Tried to work some problems? Have you tried to work a quiz? Not yet, probably. That'd be a really good idea. That's what we'll do in the review session. And we'll record the review session. Hope everything actually records. I should have checked. If not, do that real quick. Make sure the sound's turned on. I don't know why it's getting turned off, but it does. Recording. Listen. Look at all the things. No, it's not up. Look at all the things you have to do. That's an on-off switch somewhere. Okay. Recorded at a higher level. That's pretty good. All right. Anyway, so. All right, what's the deal? You guys know about accounts receivable. You record sales, right? On account. What do? Debit accounts receivable. Credit what? You're selling stuff, guys, on account. Sales, sound good, or service revenue, either one? Okay? So, you know, if we put 100,000 in here, okay, and let's say we started with accounts receivable, right, of nothing, because it's our first year, and we're going to have an account that goes with accounts receivable that represents the portion of the receivables we expect to never collect. What account on the balance sheet represents the receivables you're never going to collect? It's your estimate. The amount that's going to be in accounts receivable, the balance there, that's going to be what? What all your customers owe you. Are all of them going to pay you? No. Right? Certainly if you're a large company, probably not. You intentionally sell to people knowing they won't pay you. I don't mean you know which ones aren't going to pay you. If you two are my customers and one of you is not going to pay me, you know, first you wouldn't be my customer if I knew you weren't going to pay me, right? But if I knew which one wasn't going to pay me, I just wouldn't sell to them. But if I've got 1 million customers, you know, and 1% are not going to pay, yeah, well, I don't know who they are. So what I do is I record the sale for all of them, right? Everybody got the idea? I've got the receivable recorded. And then I'll make an estimate of what portion's not going to be paid to me. And that'll be my allowance, okay? That's it. So the allowance, God, I gave you the answer. The allowance for doubtful accounts, that account is what? My estimate of how much I'm never going to get paid. Got it? So you're going to have accounts receivable is what people owe you in total. The allowance is your estimate of how much of that's never going to be paid, and the difference is called net realizable account receivable. What does realizable mean? You're going to get paid. It's the money. You're going to get the cash, right? Revenue can't be recognized unless it is realized or realizable. What does realized mean? You got the cash. What's realizable mean? You're going to get paid. That's it. Otherwise, it's not revenue. You just gave away the product. Everybody got the idea? The goods or services. Yeah, that's all this is. Okay? So that balance and allowance is going to represent that. Well, now, obviously, on the income statement, we are going to have what? Sales, aren't we, guys? So far, I've put in 100,000 of accounts receivable. Everybody agree? And I've put in 100,000 of sales. And let's say that's for the whole year. Okay? Then what happens with this? Of course. What happens with these receivables? Let's hope. You know, the normal course of business, we hope somebody pays us. Okay, so let's make this relatively simple. Let's say that we get paid 80,000 of that this year. Wouldn't you debit cash 80,000? You already know how to do this, don't you? Okay, and what would you credit if they're paying accounts receivable out? How about accounts receivable? So you guys know what you're doing, don't you? Okay, just let yourself do it. So how much do I have left in accounts receivable? At this point, it's 20, isn't it? Okay, so let's do 20. All right, now, what I'll do then, if this is the end of the year, is I want to put on my balance sheet that 20, but I also want to put on my balance sheet my estimate of what? How much I'm never going to get paid, right? How do I do that? I don't eliminate the sale. Instead, I record what? Bad debt expense. You got it. That's the whole deal, guys. Bad debt expense. Some people call it uncollectible accounts expense. That's what it is. I like bad debt expense because it's bad people don't pay their bills. Yeah, actually people go bankrupt and meant to pay and didn't. Other people just steal from you, right? They're bad people, I guess. Okay? So I think it's bad people. Something wrong with them, though. Yeah?
That goes under operating expenses, right?
You got it. Go under operating expenses. Very good question. Absolutely. It's down there in operating expenses. One of the costs of getting the sale, though, would you agree? I intentionally accepted bad debt expense, bad debts, in order to get additional sales. If she's my competitor, she grants credit to people. I don't. Might I lose sales to her? Yes. Okay? So you grant people credit because otherwise you're going to have trouble selling. Business to business would be almost impossible. And you're selling people that are around the world, right? Product. You can't require cash in advance. Unless you don't trust them, then you do. When I was at Ocean Mushroom Farms, we bought product from Taiwan and Korea, canned mushrooms. We had to put our label on it. It looked like it was made in the U.S. It did look that way. We had a little tiny label. It still do this. Look at giant green beans sometimes, right? Or any product, right? Certainly mushrooms. They're not, yes. Right. Where did they come from? Wherever it's cheapest to make, right? They're canned goods. They can be shipped in a boat. It's no big deal. So we had containers come over from Taiwan and Korea full of mushrooms, right? A container full that we buy, right? We'd only buy 2 times a year because we were real small, but they all had our label on it, right? It looked like it was our stuff, and we inspected, right? And then we charged twice as much for it because our label was well known. That's something. Careful what you buy, guys. I'm not saying there's anything wrong with that. It's okay. Perception of quality, right? Perceived quality, you get a price for it. Whether it's real or not, yeah, pretty much. Okay, so, but anyway, yeah, so we had those containers come over, but what I was going to tell you is we paid in advance. Why did we have to pay in advance? The price was really good, and they didn't know who we were. They were real big, we were real small. We were buying from huge companies, right? Yeah, no problem. Okay. We had the bank put the money in an account that they could draw on as soon as they got authorization. Probably couldn't deliver to us, so we were protected. They couldn't take it until they delivered it. So yeah, but aside from that, what would you probably have to do? You're going to pay cash at the time? How would you even do that, right? It's impossible. It's coming on a boat, right? Okay? So usually it's after the fact, right? Big company with big company, or maybe a little company with little company. Okay, so what we would do is we would make an estimate at the end of this first year of how much of that 20,000 we're never going to see. Everybody got the idea? That's all we're doing. And what I want to do is make the allowance be equal to that estimate. Now, at this point, we'd have nothing in the allowance. Does that make sense? First year, you'd have nothing in there. Okay? And I'd have, what would I have in bad debt expense? At the beginning of every year. Nothing, because it's an expense account. What do you do with the expense accounts? Close them. Make them 0. Got it. Everybody's good. Okay, so let's say at the end of the first year, we'll do the end of the first year, I'd like to have 5% of that 20,000. I think 5% is never going to be collected. Okay? If I estimate that my bad debts are 5% of the ending receivables, what account should be 5% of the ending receivables? What are you estimating if you estimate based on the receivables? By definition, what account represents the receivables you're never going to collect? Allowance, not bad debt expense. What's bad debt expense? It's the portion of the, it's on the income statement, everybody. It's the portion of the what? No, not receivables. Receivables are in the balance sheet with the allowance. On the balance sheet, this is really important to get, everybody. On the balance sheet, I am going to do this. I'm going to show accounts receivable of 20,000 here, right? And I'm going to subtract the allowance for doubtful accounts, my estimate of how much I'm not going to receive. What kind of account is this, by the way? Credit balance in an asset. What is it? Contra asset. Increase it with a credit. Reduce it with a debit. Good. So if I estimate how much of the receivable is never going to be collected, what am I estimating? That allowance, right? So, and that'll give me my net collectible, net realizable accounts receivable. Okay? So if I say it's 5%, what number do I want to be 5% of the 20,000? The allowance. How much is that? 10% would be 2, you guys. What's 5? 1,000. I want this to be 1,000. I made our math easy. Okay? The net realizable account receivable then is 19 on my balance sheet. Everybody got the idea? What am I going to be showing on the income statement? I'm going to show sales of 100,000. Everybody agree to that? Because that's what we got in there. Okay, the first year. Everybody agree? And what am I going to show way down under operating expenses as bad debt expense? Well, in the first year, it happens to be the same number. In later years, it will not be. Okay? Because you already have a balance in the allowance. So I'm going to take the allowance from where it is, which is 0, and bring it up to what? $1,000. Everybody got the idea? How would you get from 0 up to $1,000? You got nothing in it. You'd like it to be 1,000. What are you going to do, everybody? How about crediting it? How much? How about 1,000? Is everybody staying with me? You know how to adjust accounts, don't you? If you know what the balance is in an account and you know what you'd like it to be, what do? Make the adjustment. Okay, this has a credit balance, or this has 0 balance. I'd like it to be a credit of 1,000. I think I'm going to credit the allowance, okay, for $1,000. Now this is where I have 5% of accounts receivable is my estimate. Got it? Okay. What would I debit? What am I doing? I'm estimating how many of those sales I'm never going to receive. When do you record the sale? When you deliver the goods or services, right? When should you record all the expenses associated with getting those sales to properly match them up? Expense recognition is the idea here, right? When should you record it? How about in the same period? Everybody agree with that? If I record the sale this period, shouldn't I record all the expenses associated with it? The cost of goods sold, salary expense, freight expense, all kinds of things, right? Well, is it bad debt expense just one of the expenses getting the sale? Sure. What year should they be in? How about the same one when the sale happened? Got it? Now here's the deal. When do you find out somebody's not going to pay you? Yeah, it's going to be a later accounting period. You have to wait until they don't pay you to know they're not going to pay you. Nobody says, you sell it to them and they say, well, I'm not going to pay you this. Or I'm not going to pay 1% of it. Or I'm not going to pay 10% of it. They don't do that. No, they at least claim they're going to pay it, right? And hopefully most of them intend to pay you. Some of them may get in financial difficulty and never pay you, right? Declare bankruptcy, right? It happens. Okay, they're taking risks, you're taking risks. One of the risks you're taking is that they'll go bankrupt, which might cause you to go bankrupt. It's not something. Everybody got the idea? We're kind of in this together. Integrity is really important here. They want to sell to people who you trust, and they should be able to trust you. You deliver the product they ordered for the price they ordered it. It's not a bunch of garbage, right? Stuff they can resell to somebody. If you give them a bunch of junk, what's going to happen to them? They're in trouble, right? They may come after you, but it's too late. They're losing money already, right? Losing customers. Got the idea? So everybody trusts everybody. We do, okay? And we continue doing business. What happens as soon as you don't trust somebody? You stop doing business with them. They're going to drive you into bankruptcy. Get away from them. Unless, you're all doing illegal activity together, maybe even, Then I don't know, I think thieves even have to trust each other, rip off everybody else. It's not a thing made collectively. I don't know. Mafia cartels would work or something, right? So. All right, got to keep secrets. Everybody got the idea of this thing? What are you going to debit? Bad debt expense, big deal. Okay, it really is no big deal if you understand it, is it? That entry is for replenishing the reserve, right? The reserve is the allowance, huh? It's for recording the allowance and recording bad debt expense for the period. Everybody got it? Really easy. Okay, now another way we could do it, instead of estimating based on accounts receivable, this was 5% of accounts receivable, you could estimate based on sales. If we said this was an estimate based on sales, what must it be? My bad debt expense is 1,000, right? And my sales are 100,000. With hindsight, what percent of the sales was it? That's 1%. So I could say in a problem, or in real life, of course, we could say, right? Problems are based on real life. We could say, I expect 1% of my sales are never going to be collected. So then what you do is you take your sales times 1%, and which number do you want to be 1% of sales? What goes on the income statement with sales, everybody? Bad debt expense. You're going to make bad debt expense to be 1% of sales, right? And here's the deal. If you estimate the allowance based on receivables, You'll make it be the number you want it to be, and bad debt expense will just fall out to be whatever it is. Okay? It forces it to be just whatever it happens to be. Okay? If you make your estimate based on sales, right, you're estimating bad debt expense, guess what? You'll make the bad debt expense be the number you want it to be, but what will that do to the allowance? It'll just fall wherever it does. Right? Or I guess you can sort of estimate both of them and take something halfway in between or something. It's judgment, you guys. Financial statements are estimates of what happened. It's not really what happened. Do you really know, you have a crystal ball and you know who's not going to pay you? Of course not. Do you even know what percentage is going to pay you? Of course not. We do stuff like this. Imagine Ford Motor Company selling cars. They estimate over, what is it, 100,000 mile warranty now on cars? They estimate over that 100,000 miles what their warranty repairs are going to be. No kidding. By the way, they're pretty good at it. Large companies get pretty good at bad debt expense too. It surprises. For smaller companies, it's tough. If you're a new company, it's really tough. Right? Again, when I was those for mushroom farms, we only had a few customers selling mushrooms, fresh mushrooms, right? Yeah, mushrooms. You know, a few big grocery stores, restaurants, and people who produce houses that supply small grocery stores and restaurants. We didn't have very many customers, and some of them were really big. We lost one of our big customers. Safeway stores out on the, like Kroger's here. Safeway or Kroger, well, not as big as Kroger, but Safeway, right? But anyway, instead of going to Kroger, go to Safeway. Yeah. Anyway, if Safeway had gone broke, we would have been broke this year. They were like 60% of our accounts receivable. Yeah, they thought 100% of it was collectible. It was a stable company, and it was. Okay, so but then we had our bad debts with small customers. Okay, anyway, all right, you got the idea, guys, so far? So let's say then that we do have that $1,000 in the allowance for doubtful accounts. Okay, so let's continue this thing. Okay, I've got 20 in accounts receivable. We'll do another sheet. Remember, I got 20 in accounts receivable. I got 1,000 in the allowance. Okay, and then we're going to do something else now the next year. Okay, so here we go. I've got accounts receivable. Worked its way down to 20. Everybody agree with where we're at? Right? Into 1 year's beginning of the next. Would everybody agree with that? Millisecond later. The allowance. Are you going to close the account receivable, by the way? No, it's an asset. You don't close your assets. People still owe you the money, don't they? Okay, what was in the allowance? 1,000, right, guys? Are you going to close that? No, it's a contra asset account. You're not going to close it. Okay? Now, what's going to be in sales, though? We get $1 million or 100,000 in there, but what happened? You'd close it, wouldn't you? So the beginning balance in sales would be what? 0. Okay. Bad debt expense had 1,000 in it, didn't it? Aren't you glad you're learning this stuff, you guys? You know what's really sad is there are a lot of empty chairs today, and those folks are just going to die on this quiz. They're just going to die. Why do people do that to themselves? You're sick today, aren't you? Makes all disease. Stay away from it. No, I know you got the flu or allergies, but anyway. Okay, focus on the flu. Okay, cold. She's sick today. What are you doing here? That's what you do. What, I don't know. Maybe I'll get something. Yeah. You can just watch that video. No, it's okay. Yeah. Don't breathe anything. She's trying not to. Okay. You know, really, that's what you do. We have really important things to do at work. Really important. And you don't feel very good. What do? You go. We send students over to Paris and Madrid and Rome, MBA students. And it's ridiculous. It's always the ones who are 27-year-old guys, and I guess they never went on a spring break when they were 18, 19, 20, and they go out and drink. That's what they do. They just drink and drink and drink and drink. You know what the rule is when I'm there? I could care less what you do at night. You be there. When the classes start in the morning, there's professors from all over the world, right? You be there. You be alert, you be awake, you be asking questions, and don't smell bad. Or you can go home. I could care less if they go get drunk the night before. I could care less if you're working for me and you get drunk, as long as you perform extremely well. By the way, that's not a good strategy anymore. Right? Okay. But you know, if you don't feel real good, what do? Do it anyway. You gotta be on your deathbed. Right? Pretty much. Okay? Really. That's something that's real serious. And then everybody understands. You build up political capital by always being there. You build political capital by being here today. even though you're not going to learn a damn thing because your brain's probably not here, you're sick. Okay, anyway. It's funny how we do that. Okay, so we do. All right, anyway, so let's say then we find out that some people aren't going to pay us, right? Time goes by. So this is the next step. We find $400 that is never going to be paid to us. Okay? What would you do if you find out that 400 of this 20,000 is never going to be paid to you? Now remember what we did was we estimated 1,000 would never be paid to us, right? So what are we going to do now when we find out they're not paying us? I'm going to take it out of accounts receivable because I'm giving up. And this might be 2 years later. Everybody got the idea? Whenever you give up, yes.
It's still assuming the same sale, $100,000 sale.
It's from the 100,000. It's from some prior period. But it might also be from this period. How about if you sell it to somebody this month and then you find out a few weeks later that they declared bankruptcy and they're not going to pay you? You're not happy. They're still not going to pay you. You could record it then. Whenever you find out they're not going to pay you. That make sense? Usually it's going to be a later year, isn't it? Okay? So I find out about 400 that's not going to be paid to me. What should I do to accounts receivable, everybody? If I'm giving up? How about credit it? Take it out of there. This is called the write-off, okay? I'm writing off bad debts. So in the first place, I set up the account by debiting bad debt expense and credit allowance, right? Now when I write them off, I take them out of accounts receivable. What do you want the debit to be? And this one kind of blows your brain a little bit at first.
Allowance.
Yeah, take it out of the allowance. Absolutely right. Read the chapter, didn't you? Okay, take it out of the allowance. Why? The 1,000 is my estimate of how much is going to go bad in the future, and now I found some of it. So I found some of it, so I take it out of the allowances. Everybody see that? You're going to nail this quiz if you see this stuff, right? I mean, you're just going to nail it. This is an all or nothing on this part of it, on this quiz. It really is, okay? It's kind of, well, gee, okay, I found some of them. I take them out of receivables because I'm never going to collect it. Given up, right? And I take it out of the allowance for doubtful accounts. And by the way, we keep trying to receive the money before we give up. We send them letters, we call them up, right? First emails, then letters, then call them up, then bill collector, right? And then finally give up. And by the way, do we tell them we gave up? No. They might pay us later, right? We'll handle that here too. Okay, so you got the idea, everybody? Not a big deal, is it? That's the write-off, okay? So we got the write-off. All right, then let's say our sales this year are 120,000. We grew a little bit. What would the debit be? All credit sales. Debit what? Sales, you guys. Recorded sales. Debit what? On account. Yeah, come on. Keep thinking. So I'm going to debit 120,000. Credit what? Sales. Right? Everybody good? Okay, so I put another 120 in here. We got it? Okay. And then sales are going to be 120. And then let's say that I have some cash receipts. I collect 110. Okay? What do you want to do? I collected 110 of my accounts receivable. Come on, you guys. Debit what? Cash. Make sure when I ask questions that I don't care if you say something, although it's nice if someone does, but if, keeps the flow going. But everybody's answering that to themselves, right? Everybody knows this. It's kind of like, oh, come on, Keith, right? I've always known this. Okay, good. So I got cash coming in 110, accounts receivable goes down by 110. Now it's the end of the year. Okay, that was a whole year. 120,000 in sales and 110 in cash collection. Everybody good? And the only write-off we had was that one for $400. Everybody got it? So where are we at now? Sales, of course, is 120. Bad debt expense before you put anything in is 0. And by the way, you can record bad expense every month if you want, every quarter if you want, every year if you want. How can you decide whether you want to do it monthly, quarterly, or annually? When do you record adjusting journal entries? At the end of the period when you are going to do? No, that's the end of the year. I do them then, but I might do them before that too. I might do them every month or every quarter. Or just annually. Why do you do adjusting journal entries? So you can get financial statements. You want to do a balance sheet without having the right allowance for doubtful accounts in it. Do you want to do an income statement without having the right bad debt expense in it? No. So what if you're doing monthly financial statements? You make these entries monthly. You make your depreciation entries monthly, right? You make all your accrual and deferral entries monthly, using up prepaids. earning unearned revenue, accruing salaries payable, right? Accruing revenue, interest revenue or something. Got it? All those adjusting entries you now know how to do, right? Chapter 4. When do we do them? Every month if we do monthly statements, once a quarter if we do quarterly statements. By the way, if you're running your own business, do you want to know what's going on monthly or quarterly? I want monthly. I want daily, right? Really, but at least financial statements monthly. Not just annually, right? I've actually gotten clients, new clients that only did their statements once a year and they didn't know what was going on in between. And then they wondered why they were losing money. Might be because you don't know what's going on. I said it nicer than that, right? You're gonna know every day for a lot of things. You're gonna know every month how much money you make. Absolutely. Don't you want to know every month if you're going broke or not? Oh, yeah, I think so. Be good. At least that often. Okay, so let's do this two different ways. Here's the problem that I'm going to give you on a quiz. Part A is we estimate uncollectible accounts as 5% of accounts receivable. Okay? That's A. B is going to be uncollectible accounts we estimate as 1% of sales. Can you do those two journal entries for me? What would you need to know? I need to know how much is accounts receivable and how much is sales. You bet. And then I got it made, right? Either way, what's my journal entry going to be? Did I do something wrong? Uncollectible accounts are either 5% of accounts receivable or uncollectible accounts are 1% of sales.
Okay, yeah.
Yeah, my scribbles.
Making sure that our
didn't
final
help.
cards.
Okay, you got it? Everybody got it? Okay, good. So what do I need to know? Probably what sales are. You know, if I'm going to base it on sales, what's 1% of sales, you guys? It's 1,200, isn't it? 120 times 0.01. So this is going to be $1,200. Which account is going to be $1,200, everybody? I'm estimating based on sales. Come on. What am I estimating? Bad debt expense. Okay, let's do it again. If I'm estimating based on sales, sales go on which financial statement? Sales. Sales. Income statement. No. Right? Income statement, right? Sales is the first rather last. Okay, all right. What goes on the balance sheet? Accounts receivable. That's what people owe me, right? Okay, those are my assets. Sales are my revenue. Okay, that's fine. Okay. Little brain flipped it. Okay. Anyway, so what do you think, guys? If I am estimating a percent of the sales I'm never going to get, what is that? It's a portion of the sales I'm never going to get. That's what? Bad debt expense, right? It's the expense I incurred to get the sales. Back with us. Okay, good. All right. If I use, let's say it's 5% of the accounts receivable, what's that number going to be, by the way? Oh, I have to know what accounts receivable is first. We'll calculate in a minute. But if I am going to use 5% of accounts receivable, what am I estimating? The receivables I'm never going to get. What am I estimating, everybody? The allowance. That's all it is. Okay, now these entries are going to look kind of funny when we do them. I already know this is going to be a $1,200 entry, right? But what's the entry going to be if it's, I want the allowance to be 5% of accounts receivable? First, I got to know what the allowance is. How much is that? 600? Everybody agree it'd be 600 if you had 1,000, you took 400 out of it? Yeah? Okay, good. All right. What's the balance of accounts receivable? 20 plus 120 less 110 less 400, huh? What is it?
29.6.
29.6. Okay, gang. You tell me what you want the allowance to be if it's going to be 5% of accounts receivable.
14.
What is it? 1,480. You know what? I probably wouldn't use 1,480 because this is just an estimate. What do you think I'd probably do with it? Round it to 1,500. Because otherwise it looks like you made an exact, you not only made an exact estimate, you know exactly what's not going to be paid to you. You don't know. So let's estimate out of that 29.6, it's 1,500. Everybody agree? I'd get close to the 5%. For the quiz, just use the 5%. I'll make the numbers come out good. Okay? All right. Everybody got the idea? And for the test, for the final.
In like a real
Yeah.
example, like,
Real life. Yeah.
yeah, like would the numbers not match then if they're just estimates?
We don't really know what the numbers should be, so we estimate what they should be. So when you're reading a financial statement, you're looking at an estimate of what happened and an estimate of where we're at. And that is a wonderful insight to have. Nobody knows what's going on. We're guessing. I love it when I watch politicians tell us exactly what's going to happen as a result of their economic policies. They do not have a clue. If you're in an econ class and you have somebody telling you that this is how the world works, don't do this because it might affect your grade. Don't say it. But what you should do is you should think, this is a theory. It's a theory. We don't know. You guys tell me, should we give weapon systems to people in Ukraine or not? Will more people die if we give them weapon systems or more people die if we don't? Answer that question for me. No one knows. And we've been fighting wars how long? Thousands of years. Wars are inevitable, right? We have to have, I don't know. Maybe human beings will evolve out of killing each other for no reason. Or just for greed, I guess, or wanting power, or something. Right? But would it be better if we give them weapon systems or not? If we send our own soldiers in, will more people die or less? More of our people. Those aren't the only people, as they count. Yeah. They're the only ones we care about. No. Right, we won't go. All right, but you got the idea, though? That's a great insight. These are estimates. I don't know. You tell me, is young Brand going to be worth more at the end of next year or less? Their stock. How much more? How much less? I don't know. It's a gamble. You want to buy some young stock? I would rather have young stock than have an investment in a savings account because I know I'm going to lose money there. They're going to give me 1/4 of 1% or something. It's something like that. And inflation's going to be 2%. I'm going to lose money. Never invest in a savings account. Oh, it's better than a checking account. They give you nothing. But it's not much better. Invest in the market, you guys, as fast as you can. Okay? Even though we're gambling. You're going to lose otherwise.
This is year end, both A and B, right?
Yeah, we're just saying it's year end. It could be monthly, but we'll make it year end. Yeah. Otherwise, I wouldn't have closed the books. Very good point. Yeah. Okay, so what would the entry be here? What are you going to need to do? We got 600 in the account. Everybody agree with that? And I now wish it was 1,500. How much are you going to have to put in there? It looks like what? $900. Does everybody agree I'm going to have to put 900 in there? Okay, let's do these two entries then. Everybody see what's going on, right? Let's do these two entries. First, A. Let's do A first. How is this going to work? What do I got? I want uncollectible accounts to be 5% of accounts receivable. It's got 5% of accounts receivable is approximately 1,500. Okay, we rounded to that. Okay, what do you think? It's 600 now. You like it to be 1,500. Can anybody tell me how to get there? You already told me, didn't you? Credit it for 900. Does everybody agree with that? Credit the allowance for doubtful accounts for $900. Okay? Debit what? Not accounts receivable. I don't have more accounts receivable. Bad debt expense. This is my estimate of bad debt expense. It just falls out. Remember I said if you base your estimate on receivables, you're estimating the allowance, right? You make the allowance be what you want it to be. What happens to bad debt expense? It just falls wherever it does. That's what I meant by that. Got it? And this drives people crazy, huh? I want to make both accounts what I want them to be. No, you don't get to do that. I made the allowance be what I want it to be. I put 900 in there to bring it up to 1,500. Everybody agree? And therefore, bad debt expense is 900. Got it? Let's do B now, okay? We'll do version B. Let's say the company decided to do this instead. So this is A, this one's B. Are they still going to debit bad debt expense and credit allowance for doubtful accounts? Yes, because they're replenishing the accounts, right? So here's the deal. When you make these two journal entries for me, please don't use different accounts. I'll think you're crazy. Actually, I think you don't know what you're doing. Debit bad debt expense and credit allowance, huh? It's going to be that. It's just different amounts, right? Because what we're doing is we're recording bad debt expense and replenishing the allowance. How much do we want it to be in B? 1% of sales instead of 5% of receivables. How much do we want it to be? 1,200. Guess what? You make bad debt expense to be $1,200 or $1,200, $1,200. And what does that force you to add to the allowance? 1,200. So I get what I want on bad debt expense, but that just gives me whatever happens to the allowance. Now, what would be the balance in the allowance if this happens? What's going to happen, everybody? Oh, it's going to be different, isn't it? Right? I'm not going to add 900 to it. What am I going to add to it? I'm going to add 12 to it. Got it. Does everybody see this? Again, once you see it, it's just, so what? It's got 600 in there. I want it to be 1,000. Whoops. I'm going to add 1,200 to it. So how much is it? 1,800. I can really see that. Sorry. 1,800, huh? What's bad debt expense going to be in each of these situations? In the first one, what would it be? 900. In the second one, what would it be? 1,200. They'll be different. Got it? Okay, let's make it even worse. Could I have a debit balance in the allowance? Let's see, I started with 1,000 in that allowance. How could I get a debit balance in the allowance? Not paid. Not paid. By what?
If you overestimate how much people are.
Well, or not over, maybe under. Yeah, you're on the right track, but under. What if I have 1,000 here, and then I find a customer for 1,800 that's bad? I found out I underestimated last year what my allowance should be and my bad debt expense should be. Right? And I find out later. Right? Oh well, it's a new year. So what would I have to do? If out of that original 20,000 I have in receivables, right? 1,800 turns out to be bad, and I only allowed for 1,000. What am I still going to have to do? I got to take the 1,800 out, right? I'm going to write it off, just like this. I'll be crediting accounts receivable 1,800, won't I? What do I have to take it out of receivables? Because they're never going to pay me. What else will I take it out of? The allowance, right? Still the same entry. Debit the allowance for 1,800, credit receivable for 1,800. But what happens if you have 1,000 in here and then you debit it for 1,800, guys? You have a debit balance of 800. So what will that do next time when you have to replenish the account? You have bad debt expense of 800 before you get back to what? 0. And then, of course, if you want your balance in the allowance to be 1,500, what would you have to do? You got 800 debit, and you'd like it to be 1,500. Look at this. My allowance ends up with 800 in here, right? Because I started with 1,000 and wrote off 1,800. And now I figure out, oh, I do want it to be 1,500. You guys have a suggestion for what to do? Credit for how much? 2,300. And what's that going to make my debit, the bad debt expense be? 2,300. So if you screw up your estimate in one period, what happens? With hindsight, you know it was a bad estimate. You made the best one you could. What do you do with changes in estimates? That's what we call this. Recorded in the current year, respectively into the future. You don't go back and restate the earlier years. You made the best estimate you could. So last year what did I have in the first year? $1,000. In the second year, I want the balance in the allowance to be 1,500. And what do I have to do? I got to put in, how much was it? 2,300, right? And maybe that's not enough, right? Because last year 1,000 wasn't enough, 5% wasn't enough last year, 5% enough this year. Maybe it needs to be more. So maybe I have to put in 3,000. Got the idea? So boy, are these financial statements estimated, huh? Right? This is just one estimate. There's tons of estimates in the financial statements, all kinds of them. We're going to find more when we get to inventory. One more thing and I'll let you out of here. One more little thing. What happens now if one of these customers pays me? Let's say I wrote off that $400 account, okay? What did we do when we wrote it off? Yeah, the write-off we took out of the allowance, so we debited the allowance, right? Earlier we did this, didn't we? And we credited accounts receivable. We gave up on the receivables, so we took it out of receivables, and we took it out of the allowance because we found one of them. Okay, let's say that a customer, out of that whole $400, one customer was $100, and they write to us and say, oh, we reorganized. We were in bankruptcy, we reorganized, and now we're going to pay you. What would you do when they notify you? This is good news, right? What would you do when they notify you? Debit what? Because now they owe it to you again. Put it back into accounts receivable. So this is called reinstatement, okay? Which makes sense. That's what it is, okay? Debit accounts receivable for the $100 and credit what? Where should I put it back into? Seeing as it wasn't bad after all. Somebody said what? Allowance. Absolutely. You got it, guys. This is not hard. Then what would we do when they pay us? Anybody got an idea? How about debiting cash and crediting what? Accounts receivable. And we're there. Now, if you know that they are going to, or rather you don't know they're going to pay you, they just send you the check, right? Do you have to put it into receivables? No, because they gave you the check. Then would you have to take it out of receivables? No. So what would your entry be? You could just debit cash and credit the allowance if you want, right? It looks funny, doesn't it? But it's just fine. If you want to take the shortcut, it's okay. You know, if they send it to you. If they sent you the check, you can do both those entries if you felt like it. Show up today if you can. If you can't, be sure and look at the tape of the review. We're going to do a bank reconciliation. It's on the quiz too, right? Bank reconciliation, allowance for doubtful accounts. Look at the problems that are in that quiz. I won't do anything that wasn't in the quiz in the summer, okay? There's recording with sales returns and allowances and sales discounts too, right? So make sure you do that problem in the quiz too. It's pretty straightforward, pretty easy.
On the first questions of the quiz, you're asking about having ending inventory with periodic default, periodic default, exactly how to put it.
Oh, no, that's inventory check.
Okay.
Right?
I just wanted to
That's inventory, yeah.
just wanted to double check
Yeah.
on that.
Yeah, all the inventory questions are the next step.
Okay.
Yeah.
Good. Love hearing it. Because it wasn't even mentioned in the class. I don't want to check. I understand. Actually,
That's not reading the message. All right. Good. Get us in. We'll do it next semester. You know what? You gonna be around summer?
I am.
Do it in summer. Not easier. Just take that nothing else. You focus on it. So we do it. We meet an hour and 15 minutes a day, 4 days a week. I guess you're 5 hours a week. Do a bunch of review stuff too. But you do it in 8 weeks. So it's literally more hours than we have in class regular. But it's exactly the same class. I don't back up at all. Easier is not the right word. Yeah, it's the same. It's a good way though if you've got a lot of stuff going on, you know, that if you can just concentrate on that. If you do that, don't work it every week.
Okay.
You know what I mean? So, all right, so see you later. No big deal. Yeah, we'll do 3 to 5. Yeah, come for whatever you can. Yeah, whenever you can. Fine. Come right on in.